What's going on, people? Digi here, back again for another weekly market review. If you guys are new, every Wednesday we took a look at coins on the chart chosen by yourselves. If you guys want any coins looking at for next week's review, just hit us up in the comments below. I've had a few quests for coins this week, but as always, going to start off on a few chosen by ourselves that we cover every week. Now, before we get started, as always, little disclaimer: all views and opinions expressed in these videos are for educational purposes only and should not be considered as financial advice in any way whatsoever. Right, so now we've got that out of the way, let's get started. As always, we get started on BTC. So last week we talked about, let me just get my notes up. So last week we talked about hitting the weekly bearish order block open. So I've got a daily chart, let me pull that up to a weekly so we know what we're looking at. So as always, whenever you're looking at a coin and you're doing technical analysis, always start from a higher time frame, lower. I always used to like to work from the weekly. So we talked about price being here last week. I believe the open of this candle, so 82.35. So I believe we hit 8200 and then kind of reacted away. We talked about how price would react once it hit this level. We marked out another level on the upside, and also we mentioned potential areas on the downside where price might go to. So let's actually look at this in a bit more detail. So as we mentioned, price kind of hit that weekly order block open. I think it was 8200, kind of reached up a little bit and then retraced back. At the time, I believe we mentioned areas to the downside of interest would be these previous areas of resistance potentially turning back into support and then potentially moving back into this order block. So as you can see, price retraced, kind of dipped back into this previous level of resistance, turning it into support. As you can see, the low on this candle was 76.71, and the high on this was 76.88. So as you can see, kind of dipped into this range, turned it back into support, and then moved away very sharply. This is exactly what you want to see. If you're looking at price movements, you want to see swift, sharp movements in price when it reacts to certain levels, because that will really validate any bias that you may have. So we price moved away, and as you can see, it's kind of now moved away swiftly a few days on. If we talk about what's actually happened here, so price has now moved back to this mean threshold of the weekly bearish order block that we'd already marked out. In fact, let me mark the open. I don't know why I took that off. Mark the open so we can see the range that we're working at. So if anyone's asking the midpoint of an order block, all you do is just take the open and the close, just divide it by 2, and that's the level you want to mark out. Why is that level significant? Well, you have to bear in mind if an entity is going to defend its position on an order block, more likely than not, it's going to kind of put its ammunition from the open up until the midpoint to stop it kind of retracing and reclaiming the order block. Once a midpoint on any order block is breached, then the likelihood of that being a valid order block anymore falls very, very much lower. The statistics of it kind of being valid are pretty low at that time. So moving back onto the daily, marked out this mid threshold here. We can see price moved up, boom, kind of touched it and retraced. So now we're going to be kind of looking at filling this in, reclaiming this order block, and then see how we go from there. We also talked about, sorry, give me one moment. We also talked about, sorry, when your internet's going really slow. So yeah, we also talked about these daily order blocks here, and the role that they may play. So this one here, as you can see, kind of links in with the mean threshold of the weekly candle. So if we breach this one, then the next ones we're going to be looking at on the upside are potentially going to be 9200 levels. So I think we mentioned last week like 8600 to 9200 will be potential area of resistance. So as you guys can see, that's where we're at right now. Now, on the upside from there, or on the downside, if price retraces from here, I actually like, and we talked about putting in a short-term bottom here. So, low, in fact, perfect bottom I like. Low is put in, stops are then run on the low. We then have a higher low, higher highs, perfect. We talked about market structure last week for something like this, which was like this, low, breaking out, or moving up to higher low, and then breaking out from the actual range itself. So areas to the downside, if you're going to reload, you don't need to FOMO in here, guys. If you're watching this, there's always a chance to get back in. Areas on the downside, probably we want to be looking at opening these candles here, which is 81.80, so maybe that 8200 level, going all the way down to 78. So 88,000. So 8,000 to 8,200 potential areas on the downside for retracing. On the upside, I actually feel that, times are nice. Season is coming into play. We're now moved out of these kind of winter blues. We're coming with the shoots of spring coming up soon. So looking towards the upside, we're potentially looking at this level here at 10,000, give or take, as an area of resistance. As you can see, we've got this whole range here. We've talked about this previously in our videos. If you ever see a range that the price is now potentially going to reclaim, you have to bear in mind there's potentially a lot of back holders in that range who want to get out at break even. Start of that range is like, 9,000, top is like 11,000. So yeah, somewhere in the middle, 10,000, potentially looking at an area of resistance. If we're able to break that, we've got all these stops in the market from successful shorters last year who haven't been taken. So, starting off there, it's 10.5k, 11k, all the way up to, previous highs of last year, 14k. Anyone who doesn't know how stop orders work, how a short seller will be working at this point, he sells his coins or he puts his order into short. He then has a buy order and a sell order in place to basically close his position. So his buy order or his sell order will be to sell his coins if they basically breach a level, and if he's closing the market. So sorry, let me get that right. So basically a shorter will always buy his coins back regardless of what area of the market he's closing at. So the idea is if he buys them back lower than what he sold it, he makes money. If he buys them back higher, he's lost money. So coming back to what we were saying, he is going to have buy stops, or the sellers, the shorters are going to have buy stops as their stop orders. So buy orders as their stops. So the basic premise is that you're ever looking at a previous area where there's going to be stops waiting on the short side, the guy is going to be buying the coins here. So when price moves up with power into these stops, basically, people are just buying. It's kind of like a self-fulfilling prophecy. So these things move up really quick. So going back to what I was saying, sorry, I'm waffling a little bit hungry, so kind of going off track here. Got food adverts coming up on YouTube. So going back to what we were saying, on the upside, want to be looking at kind of potentially an area of resistance all the way up to 10,000. 10,000 is that key psychological level as well. On the downside for a reload, we talked about 8,200, stuff like that. So that's Bitcoin. Moving on to Ethereum. I've got dash chart up here. We'll talk about that in a bit. But moving on to Ethereum, very similar price movements to Bitcoin. So again, we looked at the weekly. We've marked out some weekly levels right from the beginning. Initially, the weekly levels we were looking at were a break of 150. As you can see, it's really powered through that. And now we're going to be looking on the upside, anything from 180 to 200. So bring this down to a daily and get it refined. So as you can see, 150 was broken through. We had a few areas of retracement, so it didn't really kind of break through on the first couple of attempts. We then had this, again on the downside, we talked about potentially kind of this resistance here at 130 to 135 turning into support, maybe reclaiming this order block. We didn't get this far down, touched like 135, bounced away swiftly, and as you can see, really had a positive, strong update on Ethereum yesterday, kind of breaking us through that 150 and also taking out these levels here all the way up to a high of 172. So from 135 to 172, that's my math's nearly a 25% return. Please, someone in the comments correct me if I'm wrong. So decent returns on Ethereum the last couple of weeks. Now, as we mentioned, there is potential upside still here to 180 all the way to 200. 180 is that first level you want to be taking a look at. For me, this just seems like a decent area of resistance. Now, we would ideally like to see a candle like this setting on the 14th to replicate like a blow up through this. We may see a similar scenario where we have a few dips into it, retrace, potentially then move up again. Now, if we just zoom out on Ethereum a little bit, again, kind of looking back to a similar thing with Bitcoin, we've got a lot of stops here that haven't been tested since last year. Potential lots of areas for the upside if we're moving into a full-blown alt season. So that's Ethereum. Moving on to the next coin, which is Monero. Now, we were really bullish on this last week, and we just want to touch on why and how that's kind of reacted since. So we talked about this range of 43 to 48 is an accumulation zone of a previous long-term weekly order block. We then talked about price moving away. I think it was 8th of January we looked at this. So an area of resistance on a weekly chart was $60. So I'm going to show you just so you can see that marked out. So, yeah, as we can see, previously weekly order block open, $60 was the first area, and then we looked at a second area with the next bearish weekly order block of $70 to $72. So these are bearish order blocks. Sorry if I get confused sometimes. But yeah, green is bearish and red is bullish. That's an easy way to remember. So moving on to a daily, let's have a look, see what's happened. So we've moved through this with power, which is nice to see. Kind of really pushed through this $60 level, also taking out all these stops here. So we had this marked as a stop last week. And now I can put a nice green tick to show that it's taken. And I believe we talked about taking these stops out and then moving into this $70 level. Didn't quite get there today. I think the high is 68.88. So, you know, a little bit of room to go, but, you know, you potentially want to be, you know, cautious with this. We're now moving into weekly order block level with a daily order block. So, you know, there's plenty of profit being made from this low of 45 or, you know, recent short-term low up to nearly $70. So, you know, again, take your time with this. Looking to the downside, if we're going to reclaim any areas, again, looking at this bullish daily order block that's been put in place as your first area to the downside, $60 or thereabouts, 59.25. So you can start at 60 and below. Maybe put an alarm at 60 and go from there. And then moving to the upside, we would love to see another few candles like this, like we talked about on Ethereum, bust through here. And on the upside, on a more longer term, very similar as you can see on all the other charts we're going to look at today. The short-term highs or the kind of relative recent highs were all put in last summer. Been a down market since. Now got all this range to work with potentially if we're entering any potential short-term or long-term bull market. So that's Ethereum. You know, take your time with this one. The money's already kind of been made, but there is lots more to go. That kind of leads us on to this, talking about money being made, that leads us on to the next pair we're going to talk about, which is Dash. So I just tweeted about this about half an hour ago while I was doing this review, and I was like, bloody hell. You know, I mentioned Dash has sharp price movements, but you know, even I'm in shock. I'm like, geez. So let's get started on this. Previous video we talked about long-term daily bullish order block, a weekly bullish order block being broken. So that was 70 to 105. We then mentioned the short-term lows, kind of lower lows, lower lows, lower lows. And I think on last week's video was the 8th. Yeah, so it's this chart, this candle here. We talked about previous potential short-term bottom being put in on Dash, so previous long-term lows have been swept. Very kind of little interest in the market, not much being talked about. And talked about this kind of structure here forming a nice W bottom. So, sorry, let me clean up this chart. So, kind of looking at this now, I mean, it's pretty self-explanatory what's happened since last week. So, prices moved sharply away. So, where were we? The 8th of January. Kind of reclaimed, didn't really do much apart from just move up in a straight line. We've had 1, 2, 3, 4, 5, 6 days or a week. 6 days of continuous movement since we talked about this last week. Taking out the stops at this level, potential stops here in this inefficiency candle on the 19th of September. So I remember from last year, It's happened all across the market. So all this inefficiency has been filled in. This resistance that we talked about, or potential resistance, support turning into resistance from like 65 to 70 was bust through with a quickness. So yeah, that's kind of Dash. Now, I'm not going to sit here and recommend that you jump into this and kind of start trading on this in any way whatsoever. One thing I do want to show you is just zoom out on this chart. I mean, this just looks like any other classical shitcoin, just with a different name, you know. So it just shows you how much upside there is on, you know, coins like this that are reputable, that are recognized in the market, you know, long-standing. They've got continuous development, sources of funding, good marketing, the whole shebang. But you know, they've had a severe downtrend due to the kind of market conditions of crypto as a whole. You zoom out on a long-term basis on this, and you kind of take that into account. At $120 right now, and you know, we've got lots of price points to work with from the last year, 2 years. Geez, I mean, you know, 2018 is 2 years ago now. So yeah, you know, don't limit yourselves to the bigger coins that, you know, people on Twitter may talk about. There are coins out there that if you know the price movements, if you know the cycles, you can do very well just trading those coins and those coins alone. I am someone who's very familiar with Dash. Let's just scroll back. Known this coin since launch. Literally got onto it within weeks of launch, and you know, look at the explosive price movements it has. You know, when it first launched, kind of, it was set. I believe I got into this at 10 cents. You know, that's what I know. 52 cents. Yes, I remember buying it. 52 cents. I had a first high of $16. Anyone remembers those pumps on Mint Pal? You know, you remember what it's all about. Then we had another kind of market run, generic one from, like, you know, its lows in 2015 to then pumping in 2016. Market halved around here. Anyone remembers Bitcoin halving at the time? And then we had our explosive movement. So, you know, potentially going from a low of what, $9 all the way up to 130 on its first one. And then we had another midterm one of 400, and then we had this mega run, you know, to 1500 odd. So just cutting up, rounding up on Dash, you know your coins. If you knew this coin last week when we talked about it, you could see market structure, you know, kind of things are aligning. You're getting confluence. This is exactly what you want to be doing when you're looking at technical analysis. So that's enough from Dash. Moving on to the coins chosen by you guys. As always, thank you everyone for requesting your coin. This show is made for our community, you guys out there, so please keep these requests coming in. You know, you're kind of getting charts from an experienced charter, you know. So yeah, keep them coming in. And we can only keep them to one per person. So thanks everyone who asked for a lot, but just for time purposes, you know, please just pick your favorite coin or pick that. Otherwise, I literally just pick a few and go from there. So if we start off on Dogecoin, again, I'm just going to do these all in USD. The reason I'm going to do that is just on the basis of Bitcoin's going up right now. It has got its halving in the next couple of months. I'm not going to recommend trading against Bitcoin if Bitcoin is going up itself. You know, your altcoin will have to outperform Bitcoin and then some to basically make you money, if you understand what I'm saying. So having a look at Dogecoin. Shit, my notes. Right, where were we? So let's have a look. Sorry for swearing, anyone. If you're under 18, you shouldn't be watching this video anyway. Right, so Dogecoin, as we can see, kind of been in a long-term downtrend since the summer of last year, like a lot of coins. Kind of hit previous levels of accumulation before it moved up, which were between 0.0018 cents, I call it two, pretty much this 2 cent, 0.02 cents level. Zooming in, we could see we had a nice double bottom put in here. So kind of, again, candles are closing around this level. Very nice to see. Had short, nice term market structure put in place. So the W's that we're talking about. Again, if you're a noob when it comes to, you know, trading and indicators and all of that, just use the W and the M. That's all you need. And the M is basically just a reversal of the W, but on the upside. You know, so if you want to see short-term market structure breaking, and potential short-term high. Just see if it's got an M structure, high, break down, lower high, boom, you're good to go. So it's a really easy way to do it. Let me get this annoying draw tool off. So jeez, there we go. Right, so as we can see, nice short-term market structure put in place. Price has now bounced away. On the upside for this, going to potentially looking at areas of resistance as this 002 range to 003. Potentially you could just fly through this, or you could see some resistance and move back down. Again, zooming out on these things, it's looking like any other shitcoin. Plenty of upside for these things if we are going into an altcoin bull market. Do not jump in and rush. But on the flip side, now take your time and start looking at opportunities. Always traditionally, October to December has been the best time to get into coins if you're willing to kind of be patient and find bottoms. If that's not your trading style and you don't want to wait and be underwater and find a bottom, always January to March has always been a good time to find coins that have hit bottoms, start looking for retracements, and then looking to start building positions on the upside, so you're not in a drawdown position and you're kind of moving with the market. So all I'm going to say to you guys, keep your eyes peeled. With Dogecoin, there is a lot of room for the upside on this short-term range, as we said, 002, 003. Next coin I want to move on to is QNT, Quant. So first thing I noticed when I looked at this long-term downtrend, pretty much its all-time high was put in last summer. So it's been a long-term downtrend since. Interesting thing that stood out first thing straight away is, have we potentially reached potential short-term bottom here? The reason I say that is all this potential area of accumulation before price broke out on its all-time high run. Makes sense to me that price will react when it comes back to this level. So as you can see, let's just take this range as like $2 to $3. Zooming in, price hit this $2 level, or did it? No, hit $3. So $2.92 was its low. Now starting to move away. I would say don't jump into this just yet. You now want to see a short-term bottom put in. So again, potentially looking for a nice W structure. You want to be looking for something like this. Where am I? Draw. There we go. So you want to be looking for something like this. Or let's get wonky. Right. What the hell's wrong with me today? I'm gonna need to get going soon, guys. I need something to eat. So what you want to be looking for is, hopefully this works this time around, is something like this. God damn it, it's not working. Right, alright. You're looking for a W, guys. That's the easiest way I can say it. So just scrolling across, you can see, again, like with a few of the coins we talked about, lots of short-term upside. The only area of caution I'm going to exercise for a coin like this is still on its first time, kind of on its way from its first time all-time high. So there are going to be lots of areas of previous support that turn into resistance on this, because all these backholders will want to get out if they've not already sold. They don't want to get out of break even. This range of $5 to $7 is going to be the next area of the upside. So if we do see a breakout here of $4, we've potentially got this like $5 to $7 range to work out. So even if it breaks out of 4, goes to 5, you want to be very conservative. You've still got like a 25% range to work with in terms of return. You could potentially, if your bias is kind of more short term, maybe again, bearish, maybe again wait to see price moves up to this level or takes out this high, moves away, moves up to this level and retraces. That could be another potential area for you to short from. So that's Quant. And then last coin of the day, I want to try and wrap this up, make these videos a little bit shorter, is Z Classic. Jeez. So, if we ever want to zoom out on a coin and just see what's actually happened and, how something's died a slow death and a brutal one at that, this is an execution. This isn't just a normal death. This is like, drone, kind of, maybe a double drone airstrike taking you out, and then you're left in the rubble. You're still alive, but you're in the middle of the mountains where no one knows. You haven't got mobile. No one's going to help you. So that's pretty much the death that this thing died. So its all-time high was Jesus Christ. Yeah, $228 was its all-time. No, more than that. Wow. So won't let me zoom in. Is that crazy? 200 odd. 246. Jeez. So, if you look at the current price of this coin, we're sitting at 25 cents. And if you guys know anything more brutal in terms of an all-time high to its kind of current low, please let me know in the comments. I can't think of one, apart from the ones that have died, of course. So this 25 cents level, zoom out, we can see this is an all-time low in USD. This green line is its current price, so it's kind of broken through any previous levels it had before. I mean, it was launched like a couple of months here, so this is the low. There isn't anything lower. Looking back to where we are, areas for the upside. I like this bottom that we put in here. We touched it a few times. Boom, boom, boom. Higher lows all the way up. We've now got all this potential range to work with. So what I noted in my notes was, 25 to 50 cents seems to be a decent range on the upside. And then if the market has got any momentum to keep moving up, now I wouldn't see any fundamental reason why, but technically sometimes that never matters, especially in crypto. So we've got all this inefficiency to fill in. So potentially we've got from like 50 cents all the way up to maybe $1.50. I'm going to be conservative. Maybe let's say this previous support turns into resistance. So we've got all the way up to 120. So you potentially got like nearly $1 range here to work with if you're going to trade this. Yeah, I mean, again, we say that all information is educational. So, that's all I'm going to say on this. Nothing negative, nothing positive. All decisions are yours. And I would definitely research the fundamentals on this if you are going to trade an active trading position on the long term. On the short term, you've got this like 50 cents level to work with. So, if you kind of interested in trading this, just again, keep your eye out for market structure. Maybe look for a short-term time frame and get involved from there. So that's it for this week, guys. Even my computer's getting a bit hungry now. So that wraps up this week's review. Overall, a very bullish week for crypto markets in general. It will be interesting to see how we shape up to traditionally what is the most bullish period of the year leading into the spring and the summer. So if you guys have any questions or coin requests, please hit us up in the comments below. As always, thanks very much for watching, and we will see you all next week. Thank you very much.